Good. So good afternoon, everyone, and welcome to our webcast on the Brazilian transfer pricing regulations, which are now based on the OECD. It's good to have you with us today, and we have a lot to discuss. Since our last webcast, there's been certainly quite a lot of developments on the Brazilian transfer pricing rules. As you know, the rules have already been implemented for 2023 on an optional basis and for 2024 as a mandatory basis. As part of these changes, various taxpayers now have had to prepare their transfer pricing documentation for Brazilian purposes based on the OECD rules, and there has been quite a lot of transitional elements which taxpayers have been facing in this transition. So this webcast will focus on the main challenges that taxpayers are facing in terms of adapting to the new regulations. As we all know, Brazil is Germany's most important trading partner in Latin America, while Germany is Brazil's third largest importer. The change of the transfer pricing regulations and the upcoming clarifications that we will be discussing, which are also expected for some of the transactions, will certainly serve several challenges for companies operating in Brazil. My name is Andres Belais. I'm a transfer pricing director in our Düsseldorf office and also leading our competence grids for Latin America here in our German practice. With me today is my colleague Daniel Macedo, our transfer pricing partner based in Sao Paulo. Daniel, welcome to our webcast once again. Thanks for joining us, and good morning to you in Brazil.
And good afternoon to you, Andres, in Germany. Thank you so much for the invitation. I'm really glad to be here to speak about the updates on the new law, and would like to send my appreciation on everyone that is joining today to hear us. And feel free to put up your questions on the web chat, as Andreas are going to make some direction.
Perfect. Thank you, Daniel. Look forward to our discussion in the next hour. So we have in our agenda various topics to cover. I think the first one we will be discussing a general summary of what has happened since the new rules have been implemented, what is also expected in the next months and perhaps years. As we discussed the last time, and Daniel mentioned that quite well, the transition to the OECD will be a process. So the law is obviously there, but there are certain elements in terms of the normative and structures which are being developed, and still there's expectation on that developing further. So we will discuss that in the first instance. And I guess most importantly, we'll also then provide you with practical insights of what have been the main challenges that taxpayers have faced in the transition of adapting to the new rules. And lastly, we will be discussing some practical case studies in terms of the topics that we have seen German clients especially being faced with during this transition. On the next slide, I would like to start with our first polling question. And this is related to the question on intercompany transactions. So and this is basically what percentage of your intercompany transactions within the Latin American region is done with Brazil? So answer 1 is less than 10%, answer 2 between 10 and 20%, and then answer 3 more than 20%. So important to mention that your answers will be treated on an anonymous basis. So please feel free to vote. And as you are kindly already proceeding with the voting, let me perhaps mention some housekeeping items. So today's webcast will be recorded, and in case you would like to raise any questions during the presentation, please feel free to type your query in the question box, and we will try to answer this question during the presentation. If we're not able to do so, then we will certainly get back to you by email. So if we can perhaps, while we wait on that, also, Daniel, to you a question. In your let's say, work that you've been doing in the last year on the new transition, what type of industries have you been working more in terms of Germany? So what types of industries have, let's had more impact on the new transfer pricing regulations from your perspective?
Sure. So on this first year, the main concern would be the intercompany pricing of tangible goods mostly. Discussions regarding royalties and services also were addressed, but one of the most significant topics was maybe the high profitability of Brazilian companies or the situation that the legacy rules would result in high transfer pricing adjustments, which was the case for several automotive companies or auto part manufacturers in Brazil. So those have been like one of the key German points or key industries of German entities that operates in Brazil that address the regulation. The other part would be pharmaceutical and chemical industries, and those would be for maybe high profitabilities in Brazil, especially if we're talking about distributors. So there was a very good concern on German multinational groups to properly address what would be the price that these companies should have in order to be within an arm's length principle. And of course, there was significant discussions regarding customs as well and practical terms on VATs. And for sure, on the examples that we are going to have today, the case studies, we're going to be able to address that in a bit more detail.
Perfect. Thank you, Daniel. So I guess with that, we can go to the answers of polling questions if we have that. Okay, then we see here that a good number of participants have their transactions with Brazil representing less than 10%, and to some extent also more than 20%. So it's certainly showing that Brazil is definitely a very important component of the intercompany transactions that taxpayers have in Latin America. So with that polling question, we can move to the next slide, which is perhaps giving you a brief summary, if we can go to the next slide, an overview of the countries with whom Brazil has a double tax treaty. And with this, unfortunately, we have to show that for the moment, Germany does not have a double tax treaty with Brazil. We see that, let's say, the main trading partners of Brazil, which are the Netherlands, Argentina, and China, which are the countries marked with an asterisk, do have a double tax treaty. As I said, unfortunately, Germany doesn't have one with Brazil, and neither does the US, which is the other main trading partner with Brazil. So in terms of developments in the negotiation with double tax treaties, from a formal perspective, we know that the Germany Ministry of Finance publishes annual reports every January detailing the status of the double tax treaty negotiations, and it basically provides a current list of double tax treaties as well as a list of countries with whom ongoing negotiations are taking place. I guess the good news is that when we look at the list, at least that was published in 23 and 24, Brazil appears on the list of countries with whom negotiations are ongoing. Brazil did not appear on the list before those years, so perhaps this is a good development. But so far, we have not heard anything formal in respect of when that might happen. And I think that's the same case from a Brazilian perspective. So we will certainly have to wait and see how that develops. Nonetheless, the transition of the TP rules to the OECD is a good start, of having both countries close the gap, bridge the gap in terms of legal certainty, and Brazil joining the OECD or including the OECD guidelines into the regulation is certainly a good start. And with this, as I was saying in the beginning, we have quite a lot of developments, and I will then now pass it to Daniel, who will be providing us with an overview of the regulations and what is expected to come. So Daniel, over to you.
Sure, thank you, Andres. So if we can move to the next slide. Yeah, thank you so much. So just to put everyone on the same page, the transfer pricing law that we have now in Brazil, it was published in June 2023. As Andreas mentioned, there was the option for certain companies to proceed with what we call the early adoption. That would be the application of the new rules for fiscal year 2023, which is something that it's not mandatory in Brazil. Any rules in Brazil that impact corporate tax calculation basis, which is the case of transfer pricing, they have the obligation only to be applied on the subsequent year. The transfer pricing rule, since there was a lot of requests from the market, there was the alternative for the early adoption and the application for fiscal year 2023. It was not the majority of companies that proceeded with that. Actually, there was very few entities that did the early adoption, or in other words, apply the OECD guidelines for fiscal year 2023. However, those companies, being the first ones, allow us to interact a bit more with the requirements that tax authorities placed for Brazilian taxpayers regarding income tax return, transfer pricing forms, and later on regarding local file and master file. There were some technical issues. Tax authorities, they were quite diligent in trying to solve them in the fast way possible. There is still a few aspects regarding accessory obligations in Brazil, especially for commodities, as we're going to talk in a minute, that are quite unique for Brazil, but it's not that the rules regarding OECD will have a significant impact. It's more on a documentation basis and the type of information that the tax authorities would like to have access. As it is a part of the endeavors of tax authorities in Brazil and the Brazilian federal revenue to interact with the taxpayers in a way to obtain a lot of information in order to proceed with their internal analysis. In the same year, we had the first regulation, and also that presented the directions of the benchmark searches, the comparability analysis, and local file and master file content. In Brazil, there is a minimum amount of intercompany transactions that the company need to have in order to be obligated to provide local file and master file. The threshold is 15 million Brazilian reais. We're roughly talking about 2.8 million euros, which if the company is above that amount, it has to provide local file and master file. If there is a second threshold in Brazil that is 500 million Brazilian reais, roughly 80 million euros. If the companies are operating within that threshold or above that threshold, that means that they have to provide what we call the complete version of the local file, which basically is very much in line with the OECD guidelines. The ones below 500 million Brazilian reais have to provide a simplified version, which do not have the obligation of the full content of OECD template to local file. So there is a few simplifications for companies that have a less material intercompany transaction. In August this year of 2024, we also had a public consult issued by the tax authorities, mainly addressing two new topics to be proceeded in regulations. The first one would be intercompany services, especially what would be the the benefit path evaluation, and a few rules regarding pass-through costs from third parties to Brazil, similar to reimbursements. And there was also the draft regulation for APAs, indicating the possibility to address these types of agreements with the tax authorities in Brazil in order to bring a bit more certainty on the discussions that can be carried in the future with the tax authorities. Unfortunately, even though the public consultation for that matter, it ended in October, up to this date, we do not have both regulations published. Tax authorities are dealing with a lot of new topics, including Pillar 2, and we are going through a VAT reform that it's taking a lot of manpower from the tax authorities in order to being able to produce new regulations and address the market and provide all the explanation. So things are taking a bit more time than originally anticipated. And at this moment, not only the service regulation and the APA are anticipated or expected by the market, but also there are two other topics that are quite significant that at the moment we have no regulation whatsoever from the tax authorities. That will be the payment of royalties and other payments of intangibles, and the payment of loans on intercompany loan transactions. Payment of interest in intercompany loan transactions. So those are quite significant topics, and that we need a bit more clarity from the tax authorities, which unfortunately are taking a bit more time than originally anticipated. So things are just moving slower than they should. Regarding the Pillar 2, it was proposed as a provisional measure in October, and it was quickly converted into law. At the end of the year, we had the formal law. So the Brazilian government published the law 15075, that it's part of the process of covering the Brazilian tax legislation to OECD Model Global Minimal Tax Rule, or global rules for the Pillar 2. So Brazilian entities that are part of multinational groups with an annual revenue above 750 million euros in at least 2 out of the last 4 years must be subjected to the minimum effective corporate tax of 15%. The rule introduced the tax-denominated social contribution and net income, that it's the CFLL and local acronym. So it's a CFLL surcharge of tax that prioritizes the collection of the tax in Brazil, which were designed to fulfill the requirements of the qualified domestic minimum tax, the KDMTT. The rule has been enforced since January 1st, so this is a brand new rule. Income inclusion rule and undertaxed profit rule are yet to be implemented. There is the expectation of ancillary obligation, so additional documentation to be provided. So the Brazilian legislation has not completely covered and determined specific rules regarding how these obligations are going to be provided, such as the format and the correct way to report that. But we know that the tax authorities will have a specific form or a specific report to be provided on a regular basis. Finally, we also had in December what was the normative ruling addressing specific transfer pricing transactions for commodities. So on that particular basis, there is a form that taxpayers that deal with commodities need to provide on a monthly basis to the tax authorities. It has a lot of details, such as what was the commodity rate, what was the agreement, the timeline for the agreement. There is like 28 fields that the company needs, or 28 information that the company needs to provide on every on the transactions carried on one particular month, and they have up to the 10th day of the subsequent month in order to provide that. So it is quite a demanding effort, depending on the company that deals with commodity and the amount of commodities. And it's there is some bad feelings from the taxpayers on this matter, because it's a lot of information and it's not really clear how the tax authorities will apply that. So this was the timeline from the legislation published in January to what we are, or where we are at this particular moment.
Perfect.
I think that we can then address. Please go ahead.
Yeah, thank you. I was going to say thank you for that great summary. So maybe one question that comes into my mind also, especially that there's quite a lot of discussion at the moment regarding Amount B and the Pillar 1 Amount B topic. So the German administrative principles have been released last year, the 2024 ones, and there it mentions that the Amount B can be adapted as an optional basis for the so-called covered jurisdictions that were a list that was implemented by the OECD. And there are, of course, certain requirements to that. And one important requirement is that if the country is in the covered jurisdiction, that country has a double tax treaty with Germany. So as we were discussing earlier, unfortunately, Brazil is not on that list of countries that have a double tax treaty. However, I do understand that Brazil does appear in the list of the covered jurisdictions by the OECD. So do you have any comment on that, or any expectation in terms of how Brazil, or if Brazil will ultimately implement Amount B, either as a safe harbor or as a rule?
Yes. So yeah, the expectation is that Brazil will implement that. It's just going to be a matter on when the tax authorities are going to be able to properly deal with this topic in Brazil. There is an effort from tax authorities to provide simplified aspects or simplified solutions for the transfer pricing. We already have one safe harbor rule for low value added services. There is the 5% gross profit analysis or disclosure that if you are within that particular percentage of profitability, then you were waived from any benchmark searches, and there is a simplified version to fulfill the local file information. There is an expectation for Pillar 2 Amount B as well, sorry, Pillar 1 Amount B as well. This was something that tax authorities already addressed in the previous years. It is just a topic that in order to have that, we need a formal rule in Brazil. There are certain countries that, from the fact that it participates in a global approach or in a global agreement, and if there is already some publications, that would be a possibility to already address on some countries. That would not be the case in Brazil. So up to the moment that we have a formal law in Brazil addressing that, we're not going to be able to, or not, sorry, a law, but at least a regulation from the tax authorities, we will not be able to apply the Pillar 1 Amount B. But this is something that we know that is within the scope of discussions with the tax authorities.
Perfect. Thank you. Thank you for that comment, Daniel. So I guess with that great summary, we can proceed to our second polling question. And I think this will be a good transition before we go into the practical implications of what clients have been facing in implementation. So the polling question number 2 is basically asking which aspect of the Brazilian new TP legislation have you experienced to be the most challenging for your company so far? So obviously clients are still in a transition phase, so this might be varying as we go along. So the first answer would be applying the arm's length principle to existing transactions. And I guess by this answer, it's basically discussing or implying if you had difficulties transitioning from, let's say, the legacy rules into the new rules. And the second question is managing intangibles and their valuation. Third answer, is implementing year-end adjustments, and the fourth option is ensuring compliance with documentation rules. So if you have already not voted, please do so. We have seen, at least on the German side, quite a lot of experience or discussions with clients, quite a lot in terms of the benchmarking issues, in terms of what comparables should be used, what type of adjustments are needed to make that, and of course also dealing with the year-end adjustments. And we have had a lot of cases where because of the legacy rules, some subsidiaries had very nice profits, especially in certain industries where under the legacy rules there was a fixed margin which was relatively high and which ended up with a quite high operating margin once you moved into the new rules. So there's been a lot of discussion also on year-end adjustments. But let's see what our audience has responded to this, if we can show quickly the answers. And yeah, so I think as expected, it's a little bit of everything. I think with managing intangibles and their valuation is perhaps not as significant, and I think that might also be will do because clients are still evaluating how they will manage these transactions when they have it with Brazil. And as we know, we don't have yet a very clear indication or interpretation of how the Brazilian tax authorities will be treating intangibles and valuations. Our expectation is obviously that there will be the implementation also of the DEMPI concept in it. But we do see that with the other type of issues, there has been pretty much a very similar split with, I guess, transitioning from the legacy rules to the new rules showing the biggest percentage, which I think is also our experience. I'm not sure from your end, Danielle, if you have seen anything different or what is your interpretation of the new rules?
Yeah, as you mentioned, there are a few industries that profitability in Brazil was quite high, especially guided by the fixed margin methods, which consequently lead in several cases on a very high operating profit. So doing all the alignment of of the current transactions or the historical transactions carried by these companies in order to attain the arm's length principle or the targets of the multinational groups was a big challenge, and it still is. Because when you talk about alignment of product prices, there is some customs considerations as well to be taken. The implementation of year-end adjustment as well, this was another topic that resulted in significant discussion. The adjustment itself, from a transfer pricing perspective, it's really not a concern. The concern goes with the other taxes that could be discussed with tax authorities, especially customs authorities, when we're talking about reducing Brazilian profitability, which would mean that there was additional remittance to be performed abroad. And this is the topic that it is still ongoing. So it's not really a transfer pricing issue, but it is correlated because of the taxation that it's embedded on basically all remittances abroad that Brazil have, and some quite significant.
Perfect. Thank you for that, Daniel. I guess with that, we close the polling question and we move then to the practical implications.
Mm-hmm. Yes, appreciate that. So yes, if we can go to the practical slide, appreciate that. So as we started the discussion today, there was a few companies that proceeded with the early adoption of the Brazilian transfer pricing rules. And for those companies, not only the alignment with the OECD standard and the arm's length principle have to be done relatively quickly, but also they were subjected to the documentations within the fiscal year. So the companies that proceeded with that anticipation, with that early adoption, had mostly two considerations in mind. The first one would be to reduce a high profitability that the company have, especially if we're talking about distributors operating on some key sectors, pharmaceuticals, healthcare industry, chemical industry, which the operating profit, the gross profitability required by Brazil was 30 or 40%, so quite a significant amount, especially if we're talking about distributors. So there was a significant reduction on the profitability of these entities. And there was also the concern of companies that have historical very high transfer pricing adjustment, which was the case of automotive companies, companies within working on the electronic sector as well. So there was a lot of requirements a lot of requests for anticipation of this rule among these entities. The other topic that it was last applied, it is companies that proceed with certain intangibles, especially distribution of intangibles, such as software license and copyrights, in which there was a lot of interpretation from the tax authorities that they would have to have the limitation of other royalty payments in Brazil that was quite strict if we're discussing transactions carried with the related parties. So the early adoption, even though it didn't bring any particular type of benefit from a transfer pricing perspective, resulted on a more secure transaction because that application of the legacy rules regarding royalties were not applied anymore for the companies within this particular transactions. So the update of the model was something that it was less traumatic than some companies originally anticipated. A few key challenges was the fact that most of professionals that work on the taxpayers in Brazil, they were not fully prepared to deal with OECD approaches. Everything in Brazil, when we talk about transfer pricing, and not only for that matter for tax as a general, it is quite straight in Brazil. Tax authorities tend to try to place as minimal as possible interpretations upon the different legislations that we have in Brazil. It's not that interpretations did not happen, but they try to go very objective, very straightforward. And the OECD approach for transfer pricing in a way to apply and to be adopted by any economic sector does have some flexibility, does have its level of subjectiveness, especially when we're talking about proceeding with benchmark searches and other aspects on that matter. So that was quite concern on the groups here in Brazil. And dealing with that resulted in dealing with adjustments of prices to multinational groups. And when we're talking about reducing or increasing intercompany prices, we have customs discussion. Brazil does have customs regulation rules. There is customs clearance rules also attached to that, and the concern of a significant increase or decrease on prices are target with the customs valuation. And the alternatives that some companies provided is basically working with the limits of what customs authorities in Brazil have presented, which is a variation of 10% on average 6 months as something that is reasonable. So from some industries, that is going to mean that it will take more than 1 year to achieve the proper targets, but it's better to have a long-term plan than sometimes to have a very simplified and a very quick increase or decrease on prices, in which could trigger customs authorities investigation on that particular variation. So there was a few concerns on that. And when we talk about other type of transactions, such as payment of royalties, which was one of the key and most significant distinctions from what we had on our legacy rules, that not even these transactions were subjected to transfer pricing or evaluations, because if you didn't have a pre-approval by the National Patent Office requirement, and if you do not have a minimum attendance to deductibility limits in Brazil, you won't be able to do the remittance or to take the deductibility of a benchmark range, or what would be the proper trigger or target from the group. So everything was really tied to that. And now we get to the point that basically the only thing that is required is an intercompany agreement, and of course a rate expected to be in line with the arm's length principle. So these were a few challenges that the companies were concerned doing this implementation. So this not only applies to companies with the early adoption, but also with companies that have to apply for 2024, because at the end of the year, if there was any transfer pricing adjustments, that is the moment to deal with that. And now we're facing some discussions with the companies that are doing the transfer pricing adjustments even during the month of January, that have some specific concerns and some specific challenges. The companies that did the early adoption, we can say that they were the guinea pigs for this labyrinth that tax authorities provided to us. And on the income tax return transfer pricing forms, we had a few challenges. One and the most significant is that there is absolutely no minimum threshold on the information that you're going to disclose on the income tax return TP forms. That means that if you have small transactions that were not part of any particular documentation because they were not material, or that they could be evaluated as part of an integrated approach, even on these cases, they would have to be individually segmented by type of transaction and by supplier or customer, which is something that imposes some challenges, because if you don't have sometimes on your transfer pricing documentation a proper approach with less material transactions, they may be outside of any documentation. And in the income tax return, you will have to disclose what was the benchmark range, what was the method, what was certain aspects of the analysis. For example, if you use multiple years or a single year analysis, if you did an integrated analysis or segmented one, if there was any particular type of implicit support applied on the analysis, and depending on the method, if a country risk adjustment it was made or not. So there was a lot of information to be disclosed, basically a summary of the economic analysis. And this is something that all the taxpayers in Brazil that deals with intercompany transactions will have to face by July 31st, that is the due date for the income tax return in Brazil. And again, there is absolutely no threshold for this information. Local file, 15 million Brazilian reais, and master file the same, in order to be submitted or to be obliged to submit that. But for the income tax return TP forms, no limitation whatsoever. Local file and the master file, they were required to be provided for fiscal year 2023. At the very end of 2024, so December 31st was the due date for it to be submitted. So those are files that needs to be submitted to tax authorities in Brazil. It's not just capped and provided upon request. And for master file, it's not really a big concern. Tax authorities accept the master file written in not only in Portuguese, but also in English and Spanish. And since it's a PDF file, it was very simple to provide. Local file, there was a few surprises that tax authorities placed to us. Um, Basically, they asked for some segmentation of the information. So different than the report that has the beginning and end with the description of transaction, the description of the companies involved on that, with the functional analysis, the definition of what would be the best method to be applied, the benchmark search, and later the economic analysis, and with the attachments to or appendix to that report to be filed directly, which was the expectation of the market. Tax authorities asked for it to be segmented. So there is one specific file addressing the intercompany transaction, and then there is a specific files for each type of transaction. So import of goods, there is one form, one report to be provided, and import of services, there is another. If it is intangible, there is another one. And if you cannot put within the same form that will be later transformed into a PDF file with the same pages and everything connected, then you have to provide everything that cannot be pageable or cannot receive a page number on a zip file with the other attachment. So it got a bit concerned or a bit issue within the months of November and December that we are preparing those forms to be submitted. Things are a bit more clear at this moment, but nonetheless, it's not just simply take the local file, translate it to Portuguese and submit. There is some work to split. And if you have, for example, connections on your report that needs to be split, sometimes you have to duplicate some information on different forms, and the company needs to be really concerned and mindful about that. So there is this specific aspect of the local file, and that even for the simplified or the complete local file, there are segmentations in both conditions. And finally, discussions with the tax authorities that were carried during this year. Tax authorities were much more, let's say, with easier access to them in order to have informal discussions and receiving some guidance. There was not a lot of formal publications. There was the public consults that were issued, but the final conclusion of that public consults are yet to be seen. And tax authorities at the moment are not really clear on how they're going to have their transfer pricing inspection structure. What we had in the previous years regarding the structure of the tax authorities is if you are within the Rio de Janeiro and São Paulo flow or access, that means that you're going to be subjected to what we call the big taxpayer deputies. And those will be the ones that will proceed with the transfer pricing inspection, even for for companies that do not classify as high taxpayers. So these are groups that are usually a bit more trained, and they have a bit more contact with the headquarters in the capital in Brasilia. But if we're talking about the other countries, the other cities and capitals, they are usually corporate tax inspectors that also deal with transfer pricing. And at this moment, it's not clear how they're going to be integrated and how they're going to be trained regarding this significant new way to deal with transfer pricing. Andreas.
Perfect. Thank you for that summary, Daniel. I think maybe here's some questions that we usually encounter when dealing with Brazil in the last year. So one that most often comes up is what comparables should we use? Huh? And last time we had discussed that the Brazilian tax authorities have a preference for Brazilian comparables. But as we know, it is sometimes difficult to find Brazilian comparables when using the Compustat or the Capital IQ database. If those are not found, usually what taxpayers do, they go more to a broader, let's say, regional comparable set. And if that doesn't work, it's more like on a global basis. So in that respect, has there been any feedback from the tax authorities in terms of how much they're going to push for having Brazilian comparables, or any view you might have on this?
Yes, and that's a very good point. And then, unfortunately, the tax authorities have not been very transparent with that particular matter. I think that this is a topic that it's going to be discussed mostly with the inspector during the tax auditors in the future. There is a segment inside the Brazilian federal revenue. So the team that it's mostly involved on writing up these regulations, they're not going to be involved on inspections. There is a separate team, and they usually have different mindsets as well. And the mindset in the past was always that the tax authority were trying to find any particular type of mistakes in order to conclude the inspection with a fine on an assessment. If that is the mindset that they're going to bring in the future, this is going to be a very complicated topic to be dealt by taxpayers. But at the moment, in discussions that we're having among tax practitioners and with the market itself, we're still proceeding with the preference of public listed entities instead of going with a private entities. We understand that if we go with a private entity database, probably we're going to have more comparables in Brazil. However, there is the uncertainty about being able to double check if that information is accurate, if there is any particular type of consideration, since there is no public financial report with the detailed information. Also, the fact that we don't know if that company was audited or not. So how sure can we be over the information of that private company? So that is a concern. Other countries have the same that we're having in Brazil, and it will be a very important topic to be clarified with the tax authorities in the near future. If there is the possibility to address through APA, so this is something that we're going to be able to anticipate in the discussions with the tax authorities. But the majority of the benchmarks that are currently being provided in Brazil are public listed entities that goes on a foreign comparables. North America it's able to provide a lot of comparable companies, but it's not unusual to go after European or Southeast Asia comparables as well to be included on the Brazilian benchmark set.
Right, right. And with the respective, I guess, adjustment in case it's not a, let's say, a regional or Brazilian documentation comparable.
That is correct.
There's also the question, I mean, in Germany, we do apply the 25% independence criteria rule when selecting comparables. And I know that Brazil, at least for now, has a 20% independence criteria. Do you have any views on that, on if that might be changing, or if that is, let's say, for the moment, set in stone? And would you advise taxpayers to continue with this independence criteria rule, at least for the upcoming documentation?
Yeah, so the 20% rule is something that really limits the amount of comparable companies that we can use in Brazil, and it is a big concern. The rule in Brazil is 20% unless you have less than 4 comparables. In this case, you can increase to 25% for a single or the majority shareholder. On most of the comparable sets that we're dealing with, we're using that unless we are facing with very limited number of comparable companies. And then in this case, we understand that it is worth it to bring that to the tax authorities in the future during inspections. And this is something that we're going to have to deal with. And there was some requests by taxpayers during those public consultations, even on the original regulation that addressed and presented this limitation of the 20%. We understand that tax authorities are discussing this matter. It's just hard to say if this is going to be changed in the near future or not. There is big expectations on the market that it will, but we still have to wait and see.
Okay. Thank you, Daniel, for that. So just in the interest of time, before we move to the case studies, we would like to raise our third and final polling question, which is also a good bridge to the discussion we will have for the case one dealing with year-end adjustments. So if we could kindly raise the third polling question. There we have it on the screen. So the question is, what are the main challenges your company anticipates in making year-end adjustments under Brazil's new OECD transfer pricing rules? A, understanding and applying the new rules, B, obtaining the necessary documentation, 3, aligning internal processes and systems, and 4, understanding the possible impact on other taxes. As we await for the responses, Daniel, one question that also comes up is, of course, when dealing with year-end adjustments, sometimes taxpayers are dealing with massive adjustments at the end of the year, which for Brazilian purposes, and I guess in general, should be avoided as much as possible, especially in Brazil, because you do have the impact, as you were saying, on indirect taxes and withholding taxes. Do the new regulations, or at least is there expectation that the new admin rules coming up will say anything in relation to the price setting approach? So how taxpayers are expected to, in case of a tax audit, to show that they have been following and monitoring their policy during the year? Are there any, outside of, let's say, your regular documentation, any practical aspects that taxpayers should be aware of and implement to make sure that there's this process going throughout the year and avoid, as much as possible this year in adjustments?
Yeah, so for sure, there is not necessarily something to be shared with the tax authorities if you are managing your prices. Of course, there is going to be the concerns regarding customs, but if the company is proceeding with small adjustments through the fiscal year, those adjustments will have to be provided not only on the income tax return, but also in the local file. So there is that level of transparency that tax authorities are expecting. And a significant number of companies are proceeding with the transfer pricing adjustment, even though they understand that there is some customs discussions that are yet to happen. If we're talking about transfer pricing adjustment on intangible transaction services and loans, then the impact on the taxation is a bit more straightforward. Then there is less concern that the company would be subjected to those payments as well.
Perfect. So if we can see our answers to the polling question number 3. And there we see that understanding and applying the new rules is causing some headaches to many companies, and aligning internal processes and systems and understanding the possible impacts on other taxes is also quite important. So as you said, Daniel, I think the impact on other taxes is quite significant when we look at certain transactions, and that should be definitely monitored. So I think with that we can move to the first case study, which will precisely be discussing about the year-end adjustments. So in this case, we have company A, headquartered in Germany, who's a strategic decision maker, manufacturing and IP owner. So basically the entrepreneur in the transaction, selling tangible goods to company B in Brazil, who is basically distributing the products in the local territory. Company B has a double-digit operating margin of 12%, so something that we have seen, as we mentioned earlier, quite common, specifically with certain industries. The available benchmarks used for Latin American distributors show an upper quartile of 6%. And based on the preliminary analysis, it is confirmed that company B can be treated as a routine distributor. So any questions or any points you want to mention there, Danielle, on this specific transaction? I think last time we had discussed this very same case, we dealt a little bit with more the legacy rules, and now, of course, we have the new rules which are being implemented, which we would have to then treat this different in terms of how our clients implemented the year-end adjustments.
Yes, and this is a very common scenario that we see in Brazilian taxpayers. Even for fiscal year 2025, there is still expectations of Brazilian taxpayers that will have a profitability above of what would be the interquartile range or any particular type of target by the multinational groups. So companies within this scenario, they either provided already a true down to Brazil, so a invoice to diminish the Brazilian profitability, or they are going to do that now in January. And this is one particular concern, like when the transfer pricing adjustment can happen. In order to be formally recognized in Brazil as a diminishment on the operating profit and therefore the diminishment on the corporate tax basis, it must be recognized on the Brazilian accounting books contemporaneous. So as long as the books are not closed, and there is a few companies that still have their books open because they're doing their final year-end adjustments and they're preparing themselves for the auditors, they are still dealing with the possibility of doing a true down even at this moment, as long as it has the date for 2024 and been recorded in 2024. That is going to be the only alternative to diminish the profitability in Brazil. After the books are closed, then there is no possibility to do transfer pricing adjustment to diminish profitability, only to increase profitability on a case of one-sided adjustment if the Brazilian entity is operating below the lower quartile on this particular matter. But a company operating above the upper quartile, the only opportunity that they have to do a proper transfer pricing adjustment, it's only while the accounting books are still open. And for that particular approach, we're seeing here that the upper quartile is 6%. Most of companies are using the medium in order to do that transfer pricing adjustment. The rule in Brazil indicates the medium to be the one to be used. Of course, we understand that maybe tax authorities are not going to concern if the company stop at the upper quartile instead of going all the way down to the medium, but this is something more for a discussion basis. The company should consider the median to do any transfer pricing adjustment. And also, we are looking here on a situation in which the Brazilian entity is operating way above the upper quartile. If the Brazilian entity is operating within the interquartile range, but it's outside of, let's say, a particular target margin of the group, then this compensatory adjustment or this transfer pricing adjustment would not be possible, as it is understanding that if you are within the interquartile range, then you are within the arm's length range and no transfer pricing adjustment would be justifiable going up or down. So companies are dealing with that and holding what we understand that it's a risk of potential discussions with the customs authorities regarding the fact that the import tax and other taxes could be required by the customs authorities in the future. At the moment, since this is not a clear path or a clear topic, most of taxpayers are proceeding just with the transfer pricing adjustment and holding that risk. And one of the reasons for that is there is no easy way to proceed with the import tax payment. You have to amend import declarations. And amendments on import declarations are seen by customs authorities as mistaking being corrected. And for that matter, doing a lot of changes on the import declarations could trigger not only customs valuation rules, but also customs clearance gray channels in the future. So this is a topic that has to be really seen on different dimensions.
Very good. So I think that was quite enlightening to understand that part. And as we discussed last time, the legacy rules have created certain important margins in certain Brazilian subsidiaries. So we estimate that the managing of that transfer pricing will perhaps go well into the 2025 year for some companies. So with that, I guess we can go into the second case study, which is also a hot topic that we have been discussing in terms of intangibles. We don't have yet a detailed interpretation of the Brazilian rules on intangibles, but nonetheless, I think it's good to comment on this transaction. That is also quite common. So here we have also the German company as a German headquarters, strategic decision maker, IP owner. In this case, two transactions are being made to its Brazilian subsidiary. One is the provision of technology and trademark license, and the second is the sale of raw material for production. So Company D in Brazil is basically a license manufacturer, and they are paying a 1% for technology and a 1.5 licensing for trademark. The peculiarity of this case is that based on the preliminary analysis or diagnostic analysis, the company has been determined to have losses on a manufacturing level. So in this case, Daniel, when we looked at the, let's say, legacy rules, when we were dealing with technology and trademark, it was a little bit more difficult in terms of, having to inform the tax authorities about this and having an application, and there was a limit of the 1%. And now obviously we have the application of the cut method, which a little bit makes this a bit more flexible, but there's still certain elements that we certainly need to consider on this. So any view on this specific case study and specifically to the loss-making situation of Company D in Brazil?
Yes, and this is a very good example. It allows us to touch very different topics. So, as you mentioned, now with that, we do not need the National Patent Office, that is the INPI and local acronym, pre-approval. There is no concern that the 1.5% of trademark is above of what was the usual trademark limit in Brazil of 1%. It is possible to apply the 1.5. The concern is just if the benchmark support that 1.5. If it does, then for sure it's going to be a less concern. And for technology, the 1%, sometimes tax authority, sorry, the National Patent Office allow even more than that. So I would say that 1% for technology would be even easier to be appreciated by the Brazilian tax authorities. The concern here is going to be on the local file and the proper disclosure that the company in Brazil really needs those technologies in order to operate, and their business depend those in order to sustain the deductibility and later the transfer pricing approach. The fact that the company is in a law position, it is going to be a concern since the tested party is the Brazilian entity as a licensed manufacturer. They will probably require the transfer pricing adjustment, and that loss can be even increased on the royalty fee. So then there is a few concerns to be addressed. So it's fairly common in Brazil for companies to establish a royalty agreement, but tied up with the profitability, minimum profitability in Brazil. So either the Brazilian entity needs to be in a profitable situation for the royalty to be paid, operating profit on that matter, or even though sometimes there is even a minimum operating profit for the company to pay the royalties. It is a matter of agreement. There are different standards on that particular matter. But if the company ends this fiscal year paying the royalty and with a law, a transfer pricing adjustment, for sure it would be due, and that can be dealt in two ways. Either the Germany supplier would remit back, it will return part of the amount that it imported. The Brazilian entity will report that as a diminishment on cost. Again, it is possible to challenge and discussion a return of the import tax that was paid, but it is not a simple approach and can lead to other discussions. So we advise against that up to the moment that we're going to have a bit more clear path from the tax authorities. So this is the type of transaction that it's much easier to deal now with the new rules, and on the previous rules, there will be no concern about the law. There will be just the gross profitability approach here, probably on a resale minus approach, and the limitation on the National Patent Office for the technology.
Indeed. And I think one transaction that is not reflected here, but is certainly also quite common. And if we can go to the next case study, our last case study, regarding the service transaction. So independently of the last transaction, not to make things too complicated, we have here a service that is provided by the German headquarter to its Brazilian subsidiary. And again, here we had under the legacy rules a bit more flexibility in terms of the markup. I think it was, correct me if I'm wrong, Daniel, around 20%. So that was not necessarily the issue. The issue was more on the benefit test, which will still be something that will progress on the new rules. But in this case, we do have headquarter-related services with a markup of 7%. And there's, of course, an existing agreement. And there doesn't seem to be, let's say, any major issue with regards to the benefit test as a simplification for this example. So anything here, Daniel, that you would like to add in terms of how taxpayers can go about defending that headquarter services?
Sure. So headquarters services, there is also in Brazil the low value added rule. So usually finance, legal, and other administrative supporting services can be comprised with a low value added service that has a 5% profitability established on the regulation. That is a opt-in safe harbor, so it's not mandatory to have the 5%. If the company has 7%, as is in this case, it's just not going to be benefit from the value added, from the low value added service, and we'll have to disclose a benchmark that can support that 7% markup that is applied on the intercompany transaction. So it is really not a key topic here. Low value added service also have limitation on the type of transaction. So if it is any core business, commercial, marketing, they cannot be addressed within the within the low value added service. And Brazil has some limitations on deductibility for stewardship services or ownership services and any type of duplication of services. So for example, the legal fee that is being charged. If Brazil has a legal team that is large that can address all the requirements of the Brazilian entity, then there is a concern of what exactly are these legal fees that are being paid abroad, and the risk of duplication can be raised by a tax authority. So this is something to be mindful when proceeding with the evaluation of this particular type of service. However, one topic that I think it's always important to mention is transfer pricing was never a particular issue when we're talking about intercompany services to Brazil. The main issue still remains, that is the overall taxation on such services with a combined rate, 6 different taxes with a combined rate that can reach up to 40% of the amount, so 40% of the amount. So it's quite a significant tax burden, and this is the main reason for companies even these days not being charging those services to Brazil.
And Daniel, is there any indication of those additional taxes that you mentioned? Any indications that these might be relaxed now that the rules have been, the OECD rules have been implemented in place, or is that sort of a separate, different discussion, the end rule?
So Brazil is going through a VAT reform, and I think that is the one that will hit the most on this remittance on taxation. So a good portion of these taxes would be possible to be claimed as refundable or taking credit out of this, which is going to be quite significant for these services. But this implementation will take a few years, and some of these taxes are going to be combined, and we'll have to wait and see what is going to be the final conclusion regarding rate for the purchase of intercompany service. This is or any services rendered by a foreign service provider. This is still an ongoing discussion within the VAT reform. Transfer pricing and the alignment with the OECD will have less to do with that and more with the VAT reform.
Perfect, understood. Thank you very much, Daniel. So I think with this, we are unfortunately coming to an end to our webcast. There's certainly quite a lot of key takeaways that we would like to address. I think one of them is to keep monitoring the discussions that are going on a Brazilian level in terms of the tax authority, with discussions with the tax authorities, as well as keeping an eye on the new regulations regarding the number of instructions on APAs, intangibles and services. So that will be quite important. And we hope to keep you informed once these regulations come up. Before we leave, we just want to remind you about our future webcasts that our transfer pricing team has organized. If you are interested in any of these, please feel free to subscribe. So thank you very much for joining. Thank you, Daniel, as well for your participation, and to our audience for joining. And we look forward to see you next time, and have a good rest of the day. Thank you very much.